Hello, I'm Deborah Switz, and thank you for joining me today. This presentation will guide first-time homebuyers through essential steps, including connecting with experts, understanding qualification criteria, credit scores, and income calculation. Our goal is simply to equip you with knowledge and resources for a successful home purchase journey. Let's begin. Our mission today is to discuss highlighting the importance of having experts in the field. Very important. Our other mission is to have you qualify for a home loan. How do you qualify? And understanding credit scores for home loans. How do you improve your credit score? And lastly, how to figure the proper income calculation. These are important aspects I plan to cover today, and it'll get you ready for your home purchase. Speaking of experts, I would like to introduce myself, Deborah Switz, and I'm the owner of Good Friend Mortgage. So, meeting Good Friend Mortgage, who are we? We're a local Alpharetta-based independent brokerage. We were established in 2003, so we've been doing business for about 22 years now. So we have a proven track record of success. We've earned our 5-star rating with Google and our AAA rating with the Better Business Bureau. We have over 20 different lender partners, and I need to say we probably have 20 more. We probably have over 40 lender partners right now. And to build your team, we specialize in relationship development. We actually have strategies of working with realtors, attorneys, and we help people close with their realtors on time. And if you don't have a realtor yet, no worries. Let us introduce you with some preferred realtors. Partners have closed with us before and exceeded all expectations. We're available anytime. We know this is a huge undertaking, being available on weekends and evenings. You'll know you'll have a good friend helping you throughout the process. We make home happen. And let me know if you'd like to be introduced to a mortgage consultant at Good Friend Mortgage. We're here to help. So how do we qualify for a home loan? Where do we start? When we speak to a first-time home buyer, we have to establish their income. And if their income isn't there yet, then we establish what their income should be. So the first thing we do is find out 24 months of income. What did you earn in the last 24 months? Where did you earn it? What type of income was it? Was it variable? Was it fixed? And then we also determine what your current debts are. And if we're not sure, we actually pull credit, and the credit report establishes what your current debts are. So we'll review your credit report with you extensively and see what your score is. Is there any room for improvements? Are there any debts that need to be paid down? We'll discuss those debts. And the credit history is a reflection of what the lender and underwriter is going to see. So if there's something in the credit history that needs to be addressed, we're going to talk about that first before applying for a home loan. And the debts will also be reviewed. If we need to reduce the number of debts, we can help you with that. We can discuss how to reduce and maybe what the amount should be to qualify for that home loan that you're thinking about purchasing. And then having available reserves, having money in reserves. A lot of products that we have, loan products, do require 1 or 2 months reserves, being able to, like, if something happened, you can still make 1 or 2 payments on your home loan. There are so many things that we can discuss in that first consultation. We don't have to pull your credit right away, but a lot of people, we'd like to pull their credit because you don't know what you don't know. If there's something on your credit report that you're not sure about and you're really serious about going out and looking for a home loan, now's a good time to pull the credit. The credit score is good for 4 months, so we don't have to keep pulling your credit. You've got 4 months with that credit report. We can reissue it with whatever lender or whoever lender we decide to work with that can best meet your needs. Once we qualify you for a home loan, which home loan did you qualify for? Yes, there are more than one home loan product out there. So let's sit down and review that with you. If you look at the loan programs, all of you have probably have heard about 30-year fix. We're all familiar with that, but then there's different 30-year fix. There's the FHA, there's the VA loan, there's the USDA loan, there's the conventional, and then there's other conventionals, then there's non-conforming. There are so many different loan products, and the purpose of that is that everybody fits into a certain product, right? So if your credit score is a little lower, you might qualify for one product better than the other, and you'll probably get better rates. So we're here to determine not only do you qualify, but what loan you qualify for that will best serve you. So if you only have so much to put down, then there's uh, credit products out there, loan products out there with little percent down. Like FHA, you can just put 3.5% down. If you're a veteran, you can put 0% down. If you're looking in a rural area, USDA, you can put 0% down. These are items that there's so many products out there that unless you talk to a loan expert up front, you might be misguided. Please think about talking to an expert, getting qualified with an expert, and finding out what loan product matches with your uh, So once you qualify for a home loan, what happens next? Okay, well, this is where the fun starts. If you qualify, you get what they call a pre-approval letter. And that pre-approval letter is basically letting a realtor know what loan amount or what purchase price you've been qualified for. Because they don't want to waste your time showing you a home that maybe you don't qualify for. So getting a pre-approval letter will show what the purchase price you're qualifying for, which is a start. It's also a letter that they use during the offer. So you want that pre-approval letter to highlight what type of loan you're going to be getting so the seller knows how much you're putting down and what you qualified for. It's a very important document. So that pre-approval letter is valuable, and that's the first thing that you want to attain after qualifying for a home loan. Once you have that pre-approval letter in, then you can actually find a property. You can make an offer. You work with a realtor, of course. The realtor helps you make an offer, and if that offer is accepted, you go under contract. So the realtor will be covering a lot more of that process with you. But once you go under contract, that's when you give your lender a call and let them know that, hey, I'm under contract. You pre-approved me. I'm under contract. So what do we do now? So the next thing we do is we register you for a home loan. You take a full application. This is a real application. We gather all your documents. So it's a documentation gathering. A lot of times a good lender will have you kind of prepare your documents before you even make that offer. So we register your loan, we put the documents together, and then we get it ready. It's like a package that you submit to the underwriter. The underwriter now has all the data. The underwriter reviews the application and reviews all the data associated with that application, supporting all the data in the application, and then the underwriter approves you. There might be some other conditions. They'll come back and ask for maybe another pay statement or maybe another bank statement or a letter of explanation. And then once you get the final approval, they give you what they call a closing disclosure. The closing disclosure will have all the fees, and then you can close on your home loan at a designated attorney closing location. So that basically summarizes the home loan process of making an offer and closing on time. Well, next we're going to talk about credit scores. I'm sure you all know about credit scores. And there's a lot of credit score formulas out there floating around, and everyone thinks they have a certain credit score, Experian, or maybe TransUnion, Equifax, the Credit Karma, credit, all these different credit scores. So what credit score is going to be used for home approval, home loan approval? Let's find out. I have clients that call me and they tell me they've got their credit score already, they already know their score, and then when we pull it through our formula, our FICO for banking and finance is a little different than the consumer credit score. So it's invaluable that you have your lender pull your credit at the very beginning, because that score is going to be the score that's going to decide what product you qualify for and what interest rate you qualify for. So regardless of what scores are out there on the open market that you have access to, it might be a different scoring platform than what the banking and finance uses. So FICO has over 49 different formulas, and the banking and finance formula for mortgages is just one of those formulas. So we use a certain formula. You need to know what your credit score is for that formula. And what we're going to do is we're going to discuss, once we get that score, what products that your scoring will allow you to qualify for. And when I say products, we're talking about maybe a conforming agency, Fannie Mae, Freddie Mac loans, or maybe an FHA loan. Can you qualify for a VA loan with that low score? Yes, most certainly. If your score is low, you can still qualify with VA. And what's the minimum from USDA? If you're 620, well, then you could probably qualify. If you're 580, maybe not. With your 580 with FHA, you can qualify. See the diversity of the products. So pulling your credit score up front allows you to, hey, can I buy a house now with this credit score? If not, then we take time to do credit improvement. But this is where the credit score is very important. And then it also, when we pull credit, we get to see the monthly liabilities and see what your monthly debts are, and then we can decide, can some of those debts be paid off before buying the house so you can buy a little bit better, bigger and better house. That's always a possibility, and we'll review that strategy with you. Well, we could spend hours talking about how to improve your credit and how to keep your credit score up. And I think most of us know that if you pay on time and you don't utilize all your credit, you're going to have a pretty good score, right? So but one thing you don't want to do is start opening up new accounts just before qualifying for a new home loan, because opening up a lot of accounts and there's a lot of inquiries can actually lower your score a little bit. And what we want to do when you apply for a home loan, the most important loan or purchase, would be to make sure we optimize your credit score. So avoid kind of opening up new credit cards, even though if you're tempted, like, let's say it's November, December, and you're going shopping in the aisle. Everybody wants to give you like 10% off, 20% off, open a credit card. Don't do it. Just, be tolerant of the fact that, hey, I don't need to be opening up any more credit cards. So that's number one. And then number two, factors affecting your loan approval. So we want you to make sure that when we review your loan credit report, we want to make sure that you can qualify for that loan. And if there's something that just needs to be paid down, we're going to talk about that. Like if you have a rooms to go and the payment is $400 a month and it's only $1,500 left, maybe we should just pay off that $1,500, get that $400 monthly payment removed, and now you can qualify for another $50,000 in a home purchase, another $100,000 in a home purchase. See where I'm going with that? So that's something that we're going to review so paying down on your credit debts or your credit cards before applying for a home loan is also good practice. So we talk about best practice with credits and making on-time payments as discussed. So this is what we want to do. We want to get you in a situation where your score is the best and we can get you the best interest rate possible and the best loan product possible so you can get the most buying power. Right now, for first-time home buyers, trying to penetrate the first-time home buyer market is very tough. The average purchase price is a little high right now. So if we can get you the best score, then we can get you the best loan to qualify for that little bit higher priced home loan purchase. That's our goal. Well, working with an expert, you usually get some credit coaching. So that's what we do anyway, being experts in our field, is we just want to coach our clients. We're here for you. So if we're looking at a credit report and there's something on it that needs to be addressed, for one thing, getting a home loan, the lenders don't want to see disputes on the credit report because the disputes can skew the credit score. Those disputes are kind of not being calculated in. So if there are some disputes on your credit report, we're going to highlight that too. We're going to coach you on how to remove those disputes and make sure that there's no disputes on your credit. Also, if there's something in your collections, we're going to talk about maybe those collections might need to be addressed, maybe not. So we can let you know which collections should be, be should be addressed and give attention to, and then there's some that we would say no, just leave them alone. So that credit coaching comes along with nothing extra. We just like to get people in a situation where they're going to get approved. If you get approved, then we've done our job at getting you ready for your home loan. So, and then income, a lot of people not quite sure of what they're doing with calculating their income. Maybe there's too much gap in their income. Maybe there was a gap for some reason. We dig deep, we find out what was the reason for that gap, and then we can have you do a letter of explanation. Some of the loan products will allow for letters of explanation. That's number one. Number two, if your income was low last year because of an event that might have happened, we might want to talk about what happened last year. Um, Another, if there's multiple, if you have two jobs, if you haven't had two jobs for 2 years, then we can't calculate both incomes. So we'll talk about how long you've had the two jobs. Maybe waiting 6 months, we can calculate both incomes. So there's a lot of income analysis that we can do and coach you on what you might want to do in the future at getting the most income calculated so you can qualify for that first home purchase. Another thing is negotiating. If you don't have a lot of money for a down payment, then we're going to talk about what you can do to talk to the realtor about maybe negotiating. It's a buyer's market right now. Sellers are trying to sell their homes and they're happy to negotiate. Maybe they're happy to pay some of your closing costs so you don't have to come to the table with all that money. Maybe they'll be willing to pay or buy down the interest rate so you can qualify better. There's a lot of opportunity there right now with it being a buyer's market that you're a realtor and you can negotiate. So that's all a part of our coaching that's included with just applying with Good Friend Mortgage. We help you come to the table and get you ready, and that's at no extra cost. And that's so invaluable to have all that knowledge. We're here to make that happen for you. And just consider Good Friend Mortgage or your loan expert to help you with coaching needs. Well, we discussed credit. The next important item is income. There's a lot of misunderstanding on how income is calculated. If you're a W-2 employee, do you need to provide your tax returns? No, but you wouldn't know that unless you were working with an expert. So, but if you're not a W-2 employee and you have 1099s, do you provide 1099s without the tax returns? No, you actually have to have tax returns when you have 1099 income. So there's a diverse way of preparing proper income calculation for loan qualification, and that's what we're going to talk about right now. Income documentation. Oh my goodness. Be prepared. You have to have documentation. If you want the best rates and you want the best loan products, the more documentation you have, the better. So let's talk about documentation. They want to know employment history. So we got to go back 24 to 36 months, depending on where you are. Like if you're self-employed and you haven't filed your 24 tax returns yet, and we're coming into the end of 25, then I might need to go back to 22 and 23 because you haven't filed the 24 yet. That would be 3 years back. So it just depends if you're self-employed, if you're W-2, how many jobs you've had. So we need to get details on maybe the year-end statements. If you get commission or overtime, having year-end, the end of that year statement can help prove that a portion of that income was overtime and commission or bonuses. So see, there's so many different ways. So the more documentation you have, you might find it a little cumbersome, but the more documentation you have, the better you're going to get approved for the best loan possible. And that's all that the lender and the broker is trying to do. So when we ask for documentation, you need to just ante up. Just go ahead and get all that information that we request. So we're going to need tax returns maybe. We might need bank statements, usually 2 months of bank statements. If there's any big deposits, we have to explain those big deposits. So the most recent bank statements that you provide, you might want to not have any major big deposits in the last 2 months. Otherwise, you'll be writing letters of explanation and showing, basically paper trails of where that big deposit came from. So that's something that we also would be discussing as far as that income going into your bank statement. So they're going to be looking at deposits, we're looking at tax returns, we're looking at W-2s, we're looking at pay statements, the list goes on. So documentation, you can't get away from it. It's really important, so you have to embrace it. So when you get a list from your lender showing what they need for documentation, I recommend going back and checking that list twice and making sure that you covered everything. Sometimes people forget about a W-2 from one of their employers. If they've worked at 3 employers over the last 2 years, they might forget about one of their employers. So just be cognizant that you need to provide W-2s for all the employers that you worked for over the past 24 months. Very important. And then identification. If you have a Social Security card, that's great. It reinforces your identification. Providing a state license is very important. Maybe a passport would be another verification. If you have a visa, that's another verification. So verification, identification, very important. Don't forget to provide that to your lender as well. These are all documents that need to be in the file for the underwriter to review and confirm that your application is consistent with this documentation. So that's where we are on requested documentation. Just be ready. And the more ready you are when you make your offer, the quicker you'll get approved and the quicker you can close on that home loan. On the previous slide, I forgot to mention a few other sources of additional income. All right, so let's say you're not employed right now. Well, maybe you're getting Social Security. There's always an awards letter and proof of documentation of it automatically being deposited in your bank statement. That would be one source of additional income. Another additional income might be child support. Perhaps you're receiving child support or alimony, another source, or a pension that's automatically going into your bank statement that we might need an annual pension statement. So there are other sources that you might want to remember to comment on if your lender doesn't ask you, do you have any other sources of income? So those are monthly sources of income. Keep that in mind. Some of those sources of income we can gross up. If you're not paying taxes, then they do what they call a gross up to, because you're actually equivalent to a net pay, right? So we can gross it up. What would that income be if you did earn on it and pay taxes? So That's another opportunity to show a little bit more income. We want as much income as we can to qualify you. There's also another way to figure income, and that's using assets. They call it depletion of assets, but if you have a lot of assets, not a lot of first-time home buyers do, but if you did have a lot of assets, we can do it maybe a percentage of the assets as a monthly income. That's always available as well. So discussing income, additional income is really important with your client, with your lender, and hopefully we can help determine any valuable income that you might have to help you qualify for the best property purchase out there. Well, we've talked about debt, we've talked about income, we've talked about credit score. What we haven't talked about is the debt to income ratio. This is kind of a standard that different products use to determine if you qualify. So for instance, there's a housing expense ratio that's up front. So if your housing expense is 40% of your income, then that probably is going to work. If you have a really high credit score, maybe you can even go up to 45% of your income. So that's a housing expense ratio, which is a type of debt to income ratio. Then they have the total debt to income ratio, which includes the housing and then all your other monthly obligations. So that would be your total debt to income ratio, and that can vary as well with different loan products. Some loan products will go right up to 45% of your income. That includes housing and the car payment and the credit card payments and any other debts you might have. So the total ratio is 45. But we have some products that can go up to 50. We actually have some products that can go up to 55%. Now, we don't recommend pushing that envelope of going up to 55% unless, of course, there's other income coming in that they underwrite. It's not, that we can't verify, but we know you have that other income coming in. Perhaps you have a spouse whose credit score is so low and they're not on the application, but we know that their income is coming into the household. So the fact that we know that, then maybe we're ready to push the debt to income ratio a little higher. Or perhaps you have a side business that on the side that you do for, that you have just a business that you're not maybe reporting, but you do get extra cash. Maybe you watch people, or you care for people, or you have some kind of business where you're bringing in a monthly income and you feel that you can qualify for a little bit more of a house, and we can push the debt to income ratio a little bit there. For instance, if you have a part-time job even that you haven't been at for 24 months, and we know that part-time job is bringing in good money and you're confident that you're going to continue to be there, then we push the debt to income ratio. So the debt to income ratio is really a qualifying ratio, and it's very important. Another way to work with the debt to income ratio, and I mentioned this earlier, is maybe just paying off a debt. Like if the debt to income ratio is a little high, then we might want to wait a couple of months to see if we can pay off a debt, or maybe refinance a vehicle. If there's like a vehicle with an 850 monthly payment, and we can refinance it and get it down to 550, that extra $300 might help you qualify for more of a home. So that's the strategies we offer, but we have to look at and study the debt to income ratio, find out what product you qualify, and then see what we can do to help you qualify for more of a property. Well, thank you for your time. I would have liked it if I kept it under 20 minutes. It looks like we're just under 30 minutes. So thank you for your time. But navigating the home buying process involves many steps. But with expert guidance, understanding loan qualifications, managing your credit well, and with accurate income calculation, first-time homebuyers can confidently achieve their home ownership. And I have been here to help so many first-time home buyers attain the opportunity to be homeowners and to start taking that tax deduction and start building their wealth. And this is one way of building wealth, is buying your home. And if you're a first-time home buyer, this is your pathway to increase your wealth. And thank you so much for listening today. Feel free to visit goodfriendmortgage.com You can go to goodfriendmortgage.com. We have a wealth of information there, but you'll also see my contact information. Thank you so much, and I hope to hear from you soon.